Hi, this is Ron Janish, and this quick overview here is going to cover what we're going to be doing at the Pro Seminar. Pro Seminar is only available to those that have taken the expanded course. First and foremost, let's take a look on handling losers with this technique. And I know it sounds weird to start off with that. It's not very encouraging, but it's very useful because if you can keep your losers small and have realistic expectations, I think you'll have a lot better chance of success and a lot better success. Okay, first of all, let's take this one here. Yesterday I wound up going long in this area here, and I wound up putting my stop here. Now, I wound up getting stopped out, as you can see. Now, the risk reward between where I entered and where the target was rather dramatic. However, it's generally a good idea to take that risk reward ratio, and because it's using this technique, it's rather huge, and to your advantage, that is. And taking that and maybe massaging it a little bit so that it's not so huge, maybe cutting it down by a factor of 3 or 5. Okay, let me show you an example. Uh, okay, so this was the loser, and the thing to understand is that the slippage on this trade was rather significant because when it went down through here, boom, and hit my stops, uh, it was significant. There was a significant fast move, and we know to expect this in futures. And so if you have if you get in something and you're getting in with just a few points difference between where you got in and your stop, know that it, realistically, if you get filled on that stop, it's going to be a bit away from where you wanted it to be filled, okay? Or expect that anyway. Let's give you an example. Here we go. Here's one I put on yesterday. And so here's where I wound up getting in, somewhere around here. Let's say the value is 7457. Okay, let's see, here's 7457. There's the value, okay? And so I wound up getting in here, and my stop is just below that at about 74, let's take a look, 74.49, which is, geez, just 8 ticks. Well, remember that if price breaks through that stop, I would expect not to be filled at that value, possibly another 5, 10, 15 points beyond that. Okay, so, but that's not a problem with this particular approach because your risk reward ratio is rather nice. So if you enter here at 7457 and your target is up here at 7589, that's a rather significant and pleasing risk reward ratio. Okay, and typically this will take a couple of days. Now today is Friday. Don't really do much on Friday. Wound up putting things on mainly on Sunday night and going on Monday. So let's take a look at another one. Here's one that I've had on for a few days. Okay, so I wound up going long here. Let's see, 9923. Let's see where that is. That would be, let's see if I can broaden this out a little bit. My stop is here. Let's see where 9923 is. Okay, it'd be about here, about this value here. Okay, that's where I entered approximately, and my stop is down there. Okay, and my target is up there. Let's see if we can get a better handle on this. There we go. And so you can see that the target is way up here. So this still has time to go. And I've been in this trade now for a couple of days. Okay, so this particular technique I find very useful in the currencies. And in order to use this technique, I recommend a couple of things. One of which is a account at a certain brokerage firm. And I think you'll quickly see why I don't get a nickel for doing it. It's because they have such really good rates for people. And then an account at another brokerage firm, because it'll save you a ton of money. I know that sounds kind of strange, going to a broker to save money, but why doesn't the first one do that? I'll explain it all in detail. And then I also recommend having a specific charting service, namely that's rather pricey, namely QCharts, but using them in a way that's very cost effective. So what we're going to do at the seminar is we're going to go over some cost effective techniques that'll probably save you $500 to $1,000 a month in your overhead costs in trading. You should know that what this technique will give you probably probably at the most 3 or 5 trades a day. Some days there'll be no trades. I don't ever expect trades on Friday. If they do come, I'm very surprised. I don't even bother to look for them, to tell you the truth. And in terms of entry positions, and so that's what we're going to cover. Now, how we're going to do this is we're going to have a 3-day event, and it's going to be during the week when the market's open. So it'll give us time to see actually the trades put on. It'll give us time to see putting on the stops and the whole process in the cycle. So you don't just get a bunch of theory on historical studies. Okay. This is intraday, so if you wind up doing this, using this particular technique, I think you'll find that you need to keep some sort of an eye on the market for several hours a day. Okay, for the most part, you're just scanning, and sometimes you'll scan through the market and find 2 or 3 things that will give you an opportunity for an entry within the next 2 or 3 hours. And we'll show you all about how to do that and all those good kind of things. And so I thank you for your time and see you at the Pro Seminar. Oh, it is limited to 4 people, by the way. We'll not have more than 4 people for this. Okay? Thank you for your time. Bye.